Welcome to this in-depth analysis of one of the most impactful events in modern economic history, the 2008 financial crisis. In this video, we will explore the causes, triggers, and consequences of this crisis that shook the foundations of the global financial system. From its origins in the U.S. real estate market to its global repercussions, we will unravel the events that led to the economic collapse and the lessons we can learn from this monumental experience. So, get ready to dive into the turbulent economic landscape of the past decade and discover how the 2008 crisis continues to resonate in our lives today. Let's begin. The 2008 financial crisis, also known as the Great Recession, was one of the worst economic crises in modern history. Its impact was so devastating that it affected millions of people worldwide, triggering a series of events that changed the global economic and political landscape. The crisis had its roots in the U.S. real estate sector. In the years leading up to it, there was a boom in subprime mortgage lending, high-risk loans granted to borrowers with poor credit histories. These loans were bundled and sold as complex investments known as mortgage-backed securities, MBS. Banks and other financial institutions mistakenly believed that these assets were safe and profitable. As home prices began to fall in 2006, borrowers were unable to refinance their mortgages and began to default en masse. This triggered a cascade of mortgage loan defaults and a decline in the value of MBS. Financial institutions, which had invested huge sums in these assets, suffered massive losses. The collapse of stock markets and the freezing of credit led to a global recession. Companies reduced hiring and investment, and millions of people lost their jobs and homes. Governments around the world had to intervene with financial rescue packages to save banks and other institutions from bankruptcy. The 2008 crisis highlighted the importance of robust financial regulation and the need for stricter supervision of banking practices. It also served as a reminder of the dangers of excessive debt and uncontrolled financial speculation. In summary, the 2008 financial crisis was a disastrous event that had far-reaching consequences for the global economy. Although years have passed since then, its lessons remain relevant today, reminding us of the importance of financial prudence and proper regulation to prevent future crises.